The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very good morning to you. Welcome to Squawk Europe. I'm Steve Sedgwick with Karen Cho and Ritika Gupta, who has the honour of being in Downing Street. These are your headlines. UK Prime Minister Sir Keir Starmer appears to hold off his challengers, well, for another day, after essentially telling potential rebels to put up or shut up in a key cabinet meeting.
But the drama continues for another day. This is as potential leadership rival Wes Streeting is set to meet with the Prime Minister in Downing Street ahead of the King's speech.
President Trump heads to Beijing for a high-stakes summit, bringing an entourage of business leaders with him as he seeks to play down divisions between the world's two biggest economies. US consumer inflation hits a three-year high, coming in hotter than expected and fueling speculation the Federal Reserve will raise interest rates next year.
Right, let us move on. The saga of British politics, which I would argue has lasted 10 years now, ever since Brexit. Well, UK Prime Minister Sir Keir Starmer appears to put the rebellion against him just on hold on Tuesday, essentially telling MPs to put up or shut up at a cabinet minister meeting, although he did tell them to come and talk to him afterwards and then wouldn't talk to them. Yeah. OK, UK media speculation reached fever pitch as The Telegraph, which is probably to the right of British politics, I think we can all agree, reported that as many as 6 cabinet members could challenge the PM to quit. Only for Starmer to tell them that his Labour Party has a process for challenging a leader, and that process has not been triggered. In an unusual move, cabinet ministers briefed the press immediately after the meeting.
This government will do what we were elected to do, which is serve the British people. The Prime Minister has my full support in this. And let me just say this. There is a process to challenge the leader. No one has made that challenge. And what people would expect me to do is to focus on how we can grow the economy, tackle the cost of living and give them a better life.
So the Prime Minister
and
saying
that is what we're going to do.
But broadsides against the Prime Minister's leadership continue to trickle in throughout the afternoon. More than 90 lawmakers from his own party have called on him to go, while 4 ministers resigned their government positions on Tuesday to do the same. Meanwhile, more than 100 MPs signed a statement urging against a leadership contest. Plus, don't forget the ruling Labour Party has so many MPs that there's a substantial number who are yet to come out either way. Starmer called for any challenger to follow the party's official process, and that process is a tad complicated. In short, even though nearly a quarter of MPs have called for the Prime Minister to set out his departure plans, that doesn't mean anything unless at least 81 of them actually coalesce behind a single candidate for official nomination. Speculation had mounted yesterday that Health Secretary Wes Streeting could make a move, but he's seen as on the right of the party, and the MPs that have called for Starmer to go have come from across the political map, meaning he's likely to need further backers. In terms of what it means for bond markets, well, they have reacted to the uncertainty, and it is a heightened reaction we've witnessed. The yield on the 30-year gilt surging to generational highs in Tuesday's trade. This morning we're perched at 5.76%, so we've drifted off slightly at that high water level, but still elevated level. Now, that uncertainty is set to continue to another day as Streeting heads to Downing Street to see Starmer this morning ahead of King Charles's speech at the state opening of Parliament. Let's get out to Ritika for more. Ritika, the King's speech today, so it feels as though it's almost going to be incredibly embarrassing for the King to give this speech around the legislative agenda when so much hangs in the balance. But we have a key meeting, of course, today too between Streeting and Starmer. So just walk us through these developments and how you're thinking about it.
Yeah, Karen, there are even reports that the palace was concerned about King Charles giving the speech in the first place. As you mentioned, it could be very embarrassing for him in the face of all this political turmoil and all the fast developing changes we're seeing. But in focus today, of course, is Wes Streeting, the health secretary and potential leadership rival to Keir Starmer, is going to be meeting with the Prime Minister here on Downing Street ahead of the King's speech. It is a little bit quieter here this morning, but I'm expecting it to ramp up and to get busier as that meeting takes place. Now, Streeting is reportedly set to question Keir Starmer about how he plans to get them out of this mess and to discuss the gripping turmoil facing the Labour Party. Now, this is as nearly 100 MPs have called on Keir Starmer to go. Now, in the face of that, we've seen the Prime Minister remain defiant, and his message has been very clear: challenge me or back me, as he challenges any rivals to trigger a leadership debate. Starmer has once again taken full responsibility for the disaster in the local election results, but he said that the threshold for a leadership challenge has not yet been met. He says there would be a lot of destabilizing and economic costs with doing so, signaling that he's not planning to step down just yet. Now, his strategy has been to dare Wes Streeting because he knows that he doesn't have the full support of those in the left wing of the party. And we do know that now Keir Starmer does have more than 140 MPs also giving him support. But at the same time, several junior ministers have quit. We've got nearly 100 MPs calling for him to go. So while maybe there's calmness this morning, he's still definitely not out of the woods. And from analysts are saying that Keir Starmer could be gone by the end of the year. So it seems to be still remain a question of when and not if Keir Starmer goes.
Ritika, just walk me through this. The great hope for the Labour Party, apparently, is the King of the North, Andy Burnham, right? This is a chap who's a former unspectacular minister in a previous administration. If he is to become the heir apparent of Keir Starmer, he needs to become an MP, and you've been very clearly saying that as well. But I don't know if it's a clear path, even if a Labour MP, a sitting MP, were to fall on his sword honourably, or her sword honourably, and offer this safe seat to Andy Burnham. There is a slight problem here. There are no safe seats left for Labour. And we had this election, this by-election in Gorton and Denton back in February, where a lady who most people of us, none of us ever heard of, Hannah Spencer, who is a Green MP now, she won with 15,000 votes. In a seat that Labour previously, only 2 years earlier, less than 2 years earlier, had a 13,000 seat majority. Now, where's Gorton and Denton? Oh, it just happens to be in Manchester. And who's Andy Burnham? He's the mayor of Manchester. So my point here is, Labour can whine all they like about the NEC and the leadership and Keir Starmer blocking Andy Burnham's path, but even if he gets his opportunity to stand in a by-election, there's no guarantees he'll even win. That would be really embarrassing for the rebels, wouldn't it?
Yeah, it's a great point, Steve. But we don't know that even if he does get that seat, what will happen next, or if he doesn't get the seat, I should say. But reportedly, I will say that Andy Burnham has been having some secret meetings in London with his supporters, and that supposedly there is an MP that has been willing to step down, and so to trigger that by-election. So they're holding some more of the details very close to the chest. But there are those reports going on right now, and again, to your question, nothing is guaranteed here, and everything also is about timing, right? Because Wes Streeting, I mean, it would benefit him right now to trigger a speedy election, because right now Andy Burnham is not ready yet, and we know Angela Rayner still caught up in the tax probe, not ready yet. So that's a really question of when he might do it, and a lot of the supporters of the Greater Manchester Mayor, they're furious that Wes Streeting could try and get through some kind of a speedy leadership contest. So a lot of fast-moving developments. Keir Starmer might be safe for now, but he might not be. I mean, there's a lot of unknowns here.
We're all looking for the genius policies that are going to replace his as well. Anyway, thank you very much indeed for that. I hope you enjoy Downing Street yet again. I know your camera operator, Michael, loves it down there.
Let's get to Jordan Rochester, who is head of fixed strategy EMEA at Mizuho Bank. Jordan, thank you very much for joining us. The market was raking over all the different permutations from here and trying to ascertain which different leader, if there is to be a replacement, and what that would mean for bond markets. How are you viewing the situation?
Well, I think the situation yesterday was quite unlucky timing for the UK gilt market. You had the political uncertainty and oil prices went up at the same time and US rates sold off. So it really exaggerated that move that you saw in UK gilts. But clearly, we're pricing in political uncertainty. We're pricing in a shift to the left, potential change of the fiscal rules, more spending, more taxes. And that's feeding through to lower growth expectations in the UK, a lower pound and higher gilt yields.
That is a good point about how there are a series of events coming together all at once, taking us to a crossroads, which is why it's so difficult. In terms of how gilt markets now contend with the political uncertainty, there was a view that, look, if this just starts to get baked in, if there's no timeline here, if Starmer stays around for a while and that we still have the uncertainty, it just gets baked into the gilt market. Would that be the worst case scenario?
No, if Keir Starmer hangs on, that's definitely not the worst case scenario. I think the worst case scenario is if you have a big shift to the left of centre and the new policy and a new chancellor lead to essentially a Liz Truss-style budget. That's the worst case scenario. I don't think we'll get that. I think whoever becomes the chancellor, if this even happens, will have a civil service telling her or him, well, these are reasons why Rachel Reeves was sticking to the rules. If you tweak it too much, this is what could happen to the bond market. So you could have incremental change rather than dramatic change, I think, is what ends up being the case.
Jordan, I hear what you're saying, and I think Karen's questions are absolutely right. But let's be brutally honest about it. The majority of British British backbench MPs are economically illiterate. And I've seen it time and time again. They push their government into a direction where actually it is unsustainable. And they're like lemmings. They can see the cliff and they're all just running over it because they think it's going to get them re-elected as well. So I hear what you're saying, but I would never underestimate their stupidity.
I mean, what can I say to that, really? But I do remember the days of the Brexit votes when they were voting on a customs union and they were having to have lessons what a customs union was the day of the vote. So, yes, there's clearly some who aren't economically focused in their day-to-day job. But I think that the leadership and the civil service will stop that being a scenario that we have to worry about too much.
Well, I mean, again, I know, let's bash the bankers. Let's actually put a greater windfall tax on the bankers. And then all of a sudden, Jamie Dimon turns around and says, yeah, do you know that massive that investment I was going to make in the UK? I'm going to go do that in Frankfurt. I'll go and do it in Paris or something as well. And do you know what? I'm going to bash the bankers and put a bigger windfall tax on, which, funnily enough, means there's less cash available for mortgage offers and what have you. And do you know what? I'm going to carry on bashing them, which actually means gilt yields pick up even more, which actually means that regardless of what the bankers do or don't do, mortgage rates are going to go up as well. Does any of them understand this?
I think they do. I think the situation for the UK, unfortunately, is there's a US-Iran war going on at the same time. So we have the political uncertainty, which I would say would add around 30 basis points on top of gilts. But we're talking about higher oil prices as well. So you could have a much bigger move. And we're talking 5.35 in the UK 10-year. It's where I think this political situation will get us to. But if this Iran war carries on until the year end, which not enough people are talking about as a scenario, it seems to be everyone thinks it finishes in a month's time. But if we're here in 3 months, 4 months, 5 months' time, talking about the Strait of Hormuz still, you could see much higher levels in the UK 10-year gilts, 5.5, these sorts of scenarios. That
is the underappreciated element in all the benign situations, just washing out and getting to a more serious situation around the Strait of Hormuz. Let me just circle back, though, to, if not Andy Burnham, who could be the leader for the UK? I mean, who do you think is actually going to be the one that's going to be credible enough for markets, credible enough with voters to be carried forward from here?
Indeed, you had some of the faces on the screens here whilst we were waiting, and Wes Streeting, Angela Rayner, Andy Burnham. I think the one that you were missing from there was Ed Miliband. I think he's the sort of dark horse underdog that might come out of the ashes here and have a revival. He says he doesn't want the leadership. That's what people are suggesting. That's typically the sort of person who gets it.
Is this the man who refuses to compromise on British energy assets and we have to import more gas and oil from around the world rather than having our own? Is that the guy?
Well, that's the Labour manifesto.
Okay, yeah.
But the situation for the leadership is Wes Streeting is too much of the same, I think, is what a lot of political analysts will expect. Angela Rayner has already backed Burnham, and she comes with baggage with her tax situation. Burnham can't actually run yet, he's not an MP, so that leaves Ed Miliband, who if you look at the head-to-heads, Wes Streeting might not even win a leadership contest versus Keir Starmer in this Labour leadership event. It's Ed Miliband, Angela Rayner, Andy Burnham. Those are the candidates that tend to do better.
Tell us about assets. Tell us about, I think you've been quite relaxed about gilt yields at the moment. Maybe I think you were just saying a lot of it's priced in, but just because you're confident actually that they'll pull back from the. So just tell us about the pound and about gilts.
Yeah, you're talking to someone who's already made money being short UK gilts and short UK rates. So that's why I'm kind of wagging my arms around too much. We've been short for most of the US-Iran war because the UK stands out as one of the most impacted from the inflation shock that's coming. And I think the Bank of England's going to be more aggressive than what's priced. Unfortunately, that means higher mortgage rates as well. There's a bit of a sort of reluctance from the Bank of England to go ahead with rate hikes in June, but I think they will. I think if we're still talking about Strait of Hormuz, central banks such as the ECB, Bank of England go ahead, and that will lead to a continued rate sell-off. So it's very difficult to own duration. It's very difficult to own sort of UK rates. And then when it comes to sterling, I think that the shock could be higher oil prices from here, even at these high levels. And you could see a move to 132, 134 in cable, that's sterling versus the dollar very easily. And the 130 scenario happens if oil gets to $140 a barrel. So these are all
that sounds
big
really
factors.
relaxed. Would you say 132, 134?
Well, from these, we've been in such a
Bear in mind, we've been at a
market.
116 during our crisis a couple of years ago.
Well, it takes time. So
Okay.
if we have the same situation, if we're here in a year's time talking about Iran, then you can be easily talking about 110 in cable.
Just a quick line. We had US inflation yesterday and it showed some heat. What do you make of that?
Well, a lot of it was due to core services, and part of that was an annoying statistical quirk. They were making up for some government shutdown-related issues in the rent component, and you had a big softness in core goods, and that was due to the tariffs coming off that you've had, the court cases. But you had a big acceleration overall due to energy prices, and I think over the next coming months, it's not just about energy, it will be about food, because fertilizer is severely impacted in the Strait of Hormuz. I look at the Bank of England's forecast for food inflation, it's stable for the rest of the year. That's probably going to be wrong, and that's probably going to be similar for the US scenario as well. And then you've got other products such as naphtha and all these petrochemicals coming out of the Middle East. It's going to feed through to higher inflation more than what the market's pricing. So the US inflation is expected to go just above 4, but I think it could be on a 4 handle for a bit longer than markets would like to see.
Oh, Mr. Walsh, what are you going to do? Jordan, we'll talk to you another occasion. Thanks for joining us.
Thank you.
Nice to see you, sir. Jordan Rochester, head of FIC. Did you say FIC or FICC?
FIC strategy.
FIC strategy. EMEA, Mizuho Bank. Right, coming up on the show, soaring energy prices, we just mentioned there, are driving a hotter than expected US CPI. Plus, President Trump heading to Beijing, accompanied by a who's who of the C-suite. We'll look ahead at what to expect from the trip. And as the Starmer drama, I like that, Starmer drama continues into another day, we'll have more on the fallout with the former UK Treasury Minister, Jim O'Neill. I'm Steve Sedgwick from CNBC, and in my new podcast, Executive Decisions, I ask powerful leaders about their decisions that changed everything.
I'm not frightened of making tough decisions, and I think leadership can be very lonely.
Business leaders should not stay quiet in a world which is super complex.
It is absolutely fine to also change your mind.
Tough calls, personal crossroads. These are the stories that we can all learn from. It's Executive Decisions from CNBC. Get it wherever you get your podcasts.
Before the break, we were just talking about US inflation, and the latest is that consumer prices rose a more than expected 3.8% on the year in April, the highest rate since May of 2023, and up 0.5 percentage point from last month's print. Energy prices accounted for more than 40% of the headline gain, rising almost 18% on an annual basis, with the gasoline index jumping over 28%. After easing in previous months, shelter costs also rose, suggesting inflation is a problem beyond the impacts of the war in Iran. Tariffs appeared to weigh on sectors including apparel and household furnishings. Kevin Warsh, though, cleared another step on his path to becoming the next Fed chair, with a Senate vote putting him on the central bank's board of governors. Next for US President Donald Trump's nominee is the vote to be chair, which is expected today. Well, it does feel as though some of the inflation numbers caught up with markets yesterday. That combined with the oil price, and we saw the market repricing out any chance of a rate cut from the Fed this year, but also bringing forward the possibility of a 25 basis point hike in December. Now those odds at 35% from 22% earlier in the week. That did see the S&P 500, the Nasdaq, falling into the red. So some of the tech stocks that have been powering the market just flipping weaker yesterday. The exception, there was the Dow broke ranks, and you can see it was still trading stronger. So really flipping the charts away from the technology universe. In terms of the European futures, this is how we're gearing up for trade on the back of what was a downbeat session yesterday. We shed 1% on the stock 600, even more on German stocks, down 1.6% as we wrapped up shop. It does look as though we're setting course for a firmer session today. On the 50 futures, seen up the FTSE futures more than 0.5% in the green, and much stronger on the DAX, so suggesting a clawback of at least half of the lost territory yesterday. The US markets early on, the picture we're getting from Wall Street today indicates a slightly steady path into the green, more modest improvement expected, and you can see the Nasdaq should turn positive first up out of the gates if these futures hold.
Right, let's move on, because tailwinds from investment trends into data centres saw higher gross written premiums for Zurich Insurance's property and casualty business in the first quarter. The insurer said it expects no material impact from the conflict in the Middle East on its performance. Delighted to welcome to the show Claudia Cordioli, who is the CFO of Zurich Insurance. Claudia, lovely to see you. Look, talk us through the numbers. And just, I guess, one thing I really want to know is, do you think they're enough to move the needle on perception on insurers at the moment? Not just Zurich, because it's been quite a tough year in terms of stock market performance for Zurich and other insurers, and yet your numbers look great. Good morning.
Good morning, Steve. Good morning, Karen. Thanks for having me. Well, indeed, a very strong start into the year for Zurich. I'm particularly pleased about the fact that we've been able to grow in the areas that are strategic to us. And beyond the point you made on specialty and data center construction actually fueling growth in the commercial space, we've been able to expand our footprint in the middle market segment, which is a segment that we like a lot for its stability. On the life side, we've been able as well to continue to grow in the protection space, which is where we insure our customers against mortality risks, disability risks, and this comes at significantly higher margins. So across the board, the teams have been great in executing on the areas and segments that are strategic to us, and that poses us very well in continuing for the rest of the year to grow on this trajectory.
Superb. Claudia, sorry to be dull, but just to pour into a little bit more detail on data centres. Obviously, the huge growth is generating vast amounts of economic activity, especially in the United States, but elsewhere as well. What are the key risks for Zurich and the broader industry from this data centre build-out? Because obviously we talk about other over-investment risks elsewhere when Karen and I talk, but I just wondered for the insurance sector specifically, what are the biggest risks?
This is a great question, Steve. So just to give you some context, Zurich has been insuring data centers since the early 2000s. So we've got vast expertise in the construction and engineering space, which means that we are working with the hyperscalers, we are working with investors that put the money into the data centers to make sure that from the early phases of the build, everything is done according to the way we see the risks and we price them. Zurich tends to be active in the construction phase, less so in the operations phase of data centers, which also helps to frame the exposure that we've got. We have over 300 dedicated experts in the US in the construction space and another 100 globally. So we are one of the largest construction experts, and we are very well positioned actually to help our customers, and we are sophisticated in the way we would assess the risk and price them according to the completion phases, because these tend to be complex projects with very different exposure from the beginning of a data center construction, where it's essentially a beton box, right, a concrete box, down to the very sophisticated end building when everything is in, right? So we have very sophisticated ways to price the business. We are often leading on these projects, and it's a widely, shared type of risk with other players in the industry as well. Now, that said, as you said, the huge pace of growth in the data center space, and I think McKinsey estimated that between now and 2030, there's likely to be spent up to 7 trillion in data center construction, which is almost double the GDP of the UK, just to put it in context. We require a lot of capacity from investors, from insurers. So it's something that, it's growing. We are happy to play a leadership role, but it will need capital as well, and it will need further insurance capacity.
Claudia, one of the headlines this morning is that construction's actually been impacted too when it comes to product coming through from the Middle East and the Strait of Hormuz. As you look across the portfolio, where are the touch points? Is it in some of the material, whether it's for construction, whether it's for motor? Is it in travel insurance? I mean, how do you think about the wash up from the Middle East conflict so far?
Thank you, Karen. So first of all, the presence that Zurich has in the region is limited, so I don't expect us to see a financial impact, a direct financial impact that will be material for us. But as you said, right, there might be spillovers into inflation that will impact motor insurance, it will impact construction, it will impact property. The industry is well equipped, right, to reflect inflation into the prices. But this is one of the big discussion points also when we talk to our teams, right? We need to be absolutely very disciplined and very attentive in the way we monitor inflation, because there might be, some spillover into the industry.
I want to ask you about acquisitions too. Beazley, this is the London-based specialty insurer that you've lobbed an all-cash bid for. Just explain where we're at in terms of that and what sort of synergies you do expect from consolidation here.
Great. So everything is proceeding according to plan. You will have seen that the shareholder meeting of Beazley in April has voted in favor for the transaction with a 99.9% support, which is a great signal of confidence, of course, on the transaction and what we can generate as a joint enterprise. So we're very excited about that. We are proceeding in the integration planning, regulatory filings pretty much done in all the relevant jurisdictions. So we are putting all the things that need to be put into place to be ready to execute. The timeline is, as we previously communicated, still expected to be in the latter part of the year, so in the second half of the year. This is depending, obviously, on regulatory approvals. We don't expect any issue to surface from there, but it's a process we need to go through. Now, in terms of synergies, everything is on track there as well to plan and prepare for what we have announced to be the synergies. In terms of capital, we expect to generate capital releases of 1 billion over the first 2 years post-integration. We expect to generate cost synergies of 150 million, which are partially driven by cost avoidance on the Zurich part, since we are not setting up our own syndicate and presence in Lloyd's. So there's a number of things that we expect to be able to generate in terms of efficiency, but probably the more exciting piece is the revenue generation. The fact that we expect to be able to deliver at least 1 billion of additional revenues as a joint group. And just to remind everyone, we are going to be the leading player on specialty worldwide after the transaction is complete, offering a range of products from cyber, financial lines, credit and surety, construction, energy. So we're very excited about this, and we look forward to complete the transaction.